Markets are still hanging on as we continue to await earnings season and the Fed response to everything. Markets finished a little bit down today, but pretty much flat. Down 0.25 on the Dow, which is flat, 0.3 on the S&P, which is flat, and 25 points on the NASDAQ, which again is basically flat, 0.22%. Tesla earnings coming out after the bell, so that'll be really interesting to see what Tesla's earnings look like and really what it's all about. So the stocks were down earlier today. Microsoft was down on guidance. So they beat on earnings, but they were down on guidance. So that's a big issue. And one of the things that is really interesting and potentially concerning is the future, right? Recession. Are we going to have recession? The economy's strong. The consumer's still spending. Labor market's still strong. Although a lot of tech employees are getting laid off, they're getting laid off with big severance packages in most cases. And a lot of them are, working double jobs anyways, where they're working full time at one company like a Google, Microsoft, Facebook, Apple, and then they're moonlighting with other companies and, some 2-3 jobs because even with their full-time job, they're not there and they're not full-time there. So anyways, they're still making money freelancing, doing independent contractor work. And a lot of them are getting severance packages. So that's going to take some time to trickle through and affect the economy. That's why, what I've been saying is the Fed's going to have an extremely difficult time affecting the labor market and that affecting the economy because, people do have savings. But Susie Orman, Americans are short on emergency savings amid dangerous scenario for economy. High inflation and economic uncertainty are cramping Americans' ability to save for emergencies. It's a more dangerous scenario now than ever. Than it was during the pandemic. Personal finance expert Susie Orman tells CNBC. So that's a big one there. Checking account balances, savings account balances, and credit card balances are all showing signs of distress for the average consumer out there. A lot of people are paycheck to paycheck and only have a month or 2 to 6 months of savings, and that's kind of what's been propping the economy up through the holidays. Things like that. So now that we're into the new year, when the bills start coming in from the holidays and taxes are on the horizon and things like that, a lot of people are going to get hit with stimulus payment taxes and things like that. So I think a lot of people will get surprised, and that's going to affect spending, which, will slow the economy down. I'm not saying there's going to be a crash or a deep recession or anything like that. I'm just saying that those are the types of things that, can potentially slow the economy down that the markets are going to take a look at and kind of be worried about and stall out right now. So that's what's stopping the momentum of the markets, is that they're these things are being reflected in earnings. You can see the Dow kind of consolidating here, putting in this pattern generally, which is going to want to lead to a downward check of this trend line. NASDAQ, we've been watching this trend line here so far, finding support. The question, it did break below it, but it came back above and closed right on support there. So will this continue on trend, or are we going to get the rejection and move back down to check these October lows? Analysts are split. So you can get one analyst that'll tell you that we're in the good. Again, this one, closing above the trend line, dropped below just a little bit. Markets were down considerably today. They bounced back. So a lot of momentum still out there, a lot of cash still out there, investable capital, funds need to allocate. So life insurance companies, pension funds, investment funds, they have to allocate. They have to keep money moving. That's how they make money. That's how they stay employed. Like in the real estate market, there's still a lot of builders out there building because they have to stay employed. The big national home builders, public companies, they have employees, they have payroll. And the only way they all stay employed and get the big salaries and the bonuses is they got to keep moving product, got to keep building houses. Same thing with commercial development, same thing with money. The bankers have to stay employed. The investment managers, hedge fund managers have to stay employed, get their bonuses. So they got to keep money moving. That's how they generate their fees, is through assets under management and through activities. So that's a lot of what's keeping the market going. So that's a good thing. It keeps capital flowing into the markets, keeps the markets, hanging on. Eventually, these lows most likely will get tested. A lot of analysts believe the October lows are definitely going to get tested. Some say that they will get taken out and rejected, and some say that they will not. That we're going to find support on these major trends, and the market can find a balance and carve out a bottom if we don't get recession. If the Fed only raises 25 basis points and inflation looks like it's still coming down, so those are the things that the market is kind of looking at right now. Again, the VIX and these low levels, these dangerously low levels, that 18 to 19 level. The Dixie, kind of hanging on to this last leg of support here. If this breaks low, then the market could continue to run, but Dixie will most likely find a bounce here in the near term. And then the 10-year, which is again liquidity in and out, right? The 10-year rejecting on trend here, staying down at 3.4%, which is keeping interest rates low for the housing market, which is not helping the Fed's case. So these are easing of financial conditions in terms of risk assets and the Fed policy viewpoint and the things that the Fed doesn't want to see. They don't want to see rates low. They don't want to see easing of financial conditions. So they're most likely, if this continues, are going to come out hot and heavy against the markets. But we still have this week. We got next week in order to get through until the Fed meets. They meet on the right around the end of the month, 1st of February, with their policy decision. So the big debate is 50 or 25. Right now, it's leaning towards 25. But the better the market does, the looser the financial conditions are, the more likely the Fed is going to be to want to really slap the markets and put the brakes on a little bit. Here's Bitcoin hanging on just like the markets, trying to see what's going to happen next, whether we're going to get that pullback and retest these areas right in here of the previous consolidation, that 18 to 20,000 range, and just kind of hover in there, or if it's going to return back to these lows. And again, a lot of that will be driven by the Fed's decision and the policy coming forward. Here's Ethereum kind of rejecting a little bit here, rolling over, as are most of the other altcoins in the market right now. Again, same price action across the board. It's all algorithmic trading. And, the thing about trading in the crypto markets, especially, and, even in traditional markets, the market makers see your order, right? So if you're placing shorts and longs here, they see it. So they're going to drive price and liquidate you coming and going. And this is there's really less incentive to drive price higher than there is to kind of bring it up, drop it, bring it up, drop it. That's where the big money's made, not necessarily for market makers and for, exchanges and hedge funds versus the retail where money's made when price goes up. We'll return back to that again eventually, and we'll see where we get to. But we got a lot of major resistance levels to get through as price, continues to rebound. Once the economy turns, once inflation's down back around 4% or lower, and the Fed can stop raising rates, and we don't have a recession, that's when bull market conditions are back on. But until then, there's still, like I said, a lot of liquidity out there that needs a home, that needs to go to work. So that's what I'm looking at in the markets. Something else that I kind of wanted to talk about a little bit. I tweeted the other day, put a tweet out that, my first year, well, where did this tweet start? Oh, here it is. I am 55 when I was 29. So I tweeted this the other day. I am 55 currently now. I'm not a boomer. Missed it by a couple of years. But anyways, I'm currently 55. When I was 29, I started my first real company, a remodeling and handyman business. I did not go to college. I joined the Navy right out of high school. I had no money, no credit, no backing, no family members who were entrepreneurs or business people. My first year in business, I did 250,000 in sales. 7 years later, I hit 30 million, sold that business. I started, scaled, and sold 12 other businesses at the same time. I leveraged the profits into hundreds of millions in real estate development deals and other real estate deals and opportunities along the way, including the markets at the bottom in 2009. That's when I first entered the stock markets. I also coached all my kids' sports, attended all their events, served on the board of several community organizations, churches, and nonprofits. And I was home for dinner every single night, took weekends off, and took several vacations a year. In other words, I had all the freedom I wanted while I was doing all of these things at the same time. And I tweeted that if you wanted to know, how I was able to do this and how my story could possibly help you, then, share, comment, like, comment, share, whatever. And I will do a thread or a video. The people have spoken. It sounds like a video is what everybody looks for. That's me anyways. I'm not a great writer. I am not a technical analyst, but I can make some videos and I can talk. So that's what I do, right? Stay in your fast lane, go with what's working for you. So that's what works for me. So that's what I'm going to do. I also put out a tweet today on another topic. So while all this was going on, by the way, I became very unhealthy. I was, I moved from working in the field when I first started out as a remodeling handyman contractor. That's part of my story. I used to work out in the field, work with my hands and things like that. So I was able to stay, more healthy and more lean and things like that. I could eat whatever I wanted because I was physically working every day. And I was a smoker. I started smoking when I was a kid. My parents both smoked. I mean, literally when I was in 6th grade, I started smoking, 5th, 6th grade. and it was a pack a day. My parents bought my cigarettes. So I was a lifelong smoker. And in 2004, I tweeted this today. In 2004, after being a lifelong smoker and at the time more than 75 pounds overweight, so I started that business in 1997. I was pretty healthy. My fighting weight, I'm 6'1". I like to be around 165. That's a good lean fighting weight for me, 165, 170. It's kind of where I like to stay depending on the muscle that I have, but 165 is pretty comfortable for me at my height of 6'1". I had gotten, like I said, I was working all the time. I got unhealthy. I wasn't eating right. When I stopped working in the field and I started, managing people, I gained a bunch of weight. I was not eating healthy. I didn't know anything about nutrition, didn't know how to do the right things. And, anyways, I ended up 75 pounds overweight. So in 2004, I decided to change my life. I decided to quit smoking. I decided to lose weight, and I did it at the same time while I was doing all of these other things. That was at the peak of my business career. And so I tweeted that out, and it took me 2 years to get to my target weight. And and I've kept it off ever since. In fact, at 55 right now, I am still in great shape, and I have never looked back. And so I tweeted there, if you'd like me to share how I did it and what I do today to maintain. That's supposed to say maintain. Unfortunately, I could not edit that. But if you want to know what I do now to maintain my weight and healthy lifestyle, comment below, like, share, all that good stuff. And I will do a video on that topic, because now I know everybody prefers videos from me because I'm no writer. But anyways, I will tell you about my health journey and how I quit smoking and lost weight at the same time. Because if you're a smoker or know somebody who is, usually what happens when you quit smoking, you gain a bunch of weight. And I was not going to let that happen. So I will share that story as well in a video, but only if you want to hear it. If you don't want to hear it, I won't share it. So anyways, that's all I have for today. This channel is all about entrepreneurship, real estate investing, real estate development, buying companies, building companies, leadership, mindset, health, and nutrition, because it all goes together, right? It's all about, sound mind, sound body, sound soul, sound business, sound life. So you got to, you want the whole package, right? You don't want to be like knocking it out of the park in one area and just losing it in the other area. So these are all of the things that I talk about. And I talk about the markets and crypto as well, because like I said, the goal is not only to make a lot of money, but also to protect that wealth, to grow that wealth and sustain it for your lifestyle and generations to come, so that, hopefully they can have a better life than we did. And we can leave the world a better place, not only just for our families, but for the community, to give back. And that's why I do what I do: impact, giving back, passing it on. So these are the things that I talk about. These are the things I'm looking at. I'll see you in the next video.